Welcome, aspiring Bachelor of Commerce students, to a pivotal moment in your academic journey. We are thrilled to introduce you to Intermediate Financial Accounting 1, a cornerstone of your business education. This unit is a crucial step in your accounting career, providing you with the tools and knowledge necessary for professional growth. Building on your introductory knowledge, we'll delve deeper into the principles and practices that underpin financial reporting. Here, you'll learn to prepare and interpret with precision and insight financial statements for various business entities, understanding the nuances of each. The course focuses on applying accounting standards, specifically in real-world scenarios, bridging the gap between theory and practical application. This is especially important within Kenya's dynamic economy, where businesses face unique challenges and opportunities. Whether you're at the University of Nairobi, embarking on your academic journey, Kenyatta University, pursuing excellence in business studies, or another institution dedicated to higher learning, this unit is central to your financial literacy, empowering you to make informed decisions. You'll discover how companies measure performance using key metrics and indicators and report their financial position, a critical aspect of transparency and accountability. These are skills valuable not only for accountants, but for anyone involved in the world of business. This includes managers and entrepreneurs alike, who need to understand the financial implications of their decisions. Mastering this unit gives you a competitive edge, setting you apart in the job market. It also prepares you for advanced accounting topics, opening doors to further specialization and expertise. You'll apply international financial reporting standards, the global benchmark for financial reporting, to common business transactions, ensuring consistency and comparability across different organizations. You will also tackle complex areas requiring judgment, developing your critical thinking and problem-solving abilities. Expect to engage with calculations, honing your quantitative skills, case studies, fostering collaborative learning and teamwork, and real-world examples, providing practical applications of the concepts you learn. All of this will be relevant to Kenya's economic landscape, giving you a local perspective on global accounting practices. By the end, you'll confidently prepare, with a strong understanding of accounting principles, analyze, and interpret financial statements, extracting meaningful insights from complex data. This will provide insights into a company's health, enabling you to make informed investment and management decisions. This journey will be challenging, requiring dedication and perseverance, but the skills you gain are essential, providing a solid foundation for your future career. Ultimately, this will set you up for your future in business and finance, paving the way for a successful and rewarding career. The conceptual framework for financial reporting is the backbone of all international financial reporting standards. It guides standard setters, preparers, and auditors, especially when no specific standard applies. Key elements include the objective of financial reporting, qualitative characteristics like relevance and faithful representation, and definitions of assets, liabilities, equity, income, and expenses. Understanding the framework ensures consistency and transparency in financial reporting, making statements comparable and understandable across companies. As a student, mastering the framework means you can tackle new accounting issues with confidence and sound judgment. This foundational knowledge empowers you to evaluate accounting policies and make reasoned decisions, skills vital for any financial professional. Property, plant, and equipment, PAPPE, are tangible assets used in business operations, governed by IAS 16. You'll learn about initial recognition, measurement, depreciation, revaluation, and derecognition, crucial for reflecting a company's investment in long-term assets. For Kenyan businesses, accurate PPE accounting is vital for assessing capacity and stability. Intangible assets like patents and software are covered by IAS 38. You'll distinguish between acquired and internally generated intangibles and learn about recognition, measurement, and amortization. Understanding these topics ensures accurate reporting of a company's productive capacity and intellectual property. You'll gain practical skills in calculating depreciation, amortization, and handling asset disposals and impairments. Inventory accounting, a critical aspect of financial management, is guided by IAS 2, the international accounting standard that sets the benchmark for inventory valuation and reporting. This standard covers valuing goods for sale, ensuring they are accurately reflected on a company's balance sheet. It also applies to goods in production, or those intended for use in providing services to customers. In this module, you'll learn to determine the cost of inventory, a fundamental step in accurate financial reporting. You'll also apply cost formulas like FIFO, or first in, first out, and the weighted average method, each offering a different approach to inventory valuation. Furthermore, you'll learn to measure inventory at the lower of cost and net realizable value, ensuring that inventory is not overstated on the financial statements. Accurate inventory accounting is particularly crucial for businesses operating in Kenya, significantly impacting reported profits and the overall value of a company's assets. Shifting our focus to revenue recognition, under IFRS 15, the globally recognized standard, a comprehensive 5-step model is employed. This model is designed to ensure that revenue is recognized in a way that faithfully reflects the transfer of promised goods or services to customers, aligning revenue recognition with the underlying economic substance of the transaction. You'll apply this model to real-world contract scenarios, gaining practical experience in revenue recognition. This includes identifying performance obligations within contracts and meticulously determining the appropriate timing for when to recognize revenue. Mastery of these concepts is absolutely key, playing a vital role in preparing reliable and transparent financial statements. Ultimately, this leads to a deeper understanding of overall business performance. These skills are absolutely essential for anyone involved in finance, sales, or operations, providing a solid foundation for informed decision-making and strategic planning. Receivables and payables are core to working capital management, guided by IFRS 9. You'll learn about initial recognition, measurement, and impairment of receivables, and proper accounting for payables. Provisions and contingencies under IAS 37 involve recognizing uncertain liabilities and disclosing possible obligations or assets. Events after the reporting period, governed by IAS 10, require you to distinguish between adjusting and non-adjusting events for accurate financial statements. You'll develop skills to calculate bad debt provisions, apply recognition criteria for provisions, and prepare disclosures for contingencies. This knowledge ensures financial statements reflect true obligations and risks, critical for decision-making. Assessment in this unit includes continuous assessment tests, assignments, and a final exam. CATs and assignments test your understanding and practical application of accounting standards throughout the semester. The final exam covers both theory and practical problems, challenging you to apply principles to real-world scenarios. Success requires more than memorization. It demands analytical thinking and problem-solving. You'll sharpen your numeracy, critical thinking, and communication skills, all highly valued in the accounting profession. Recommended resources include Financial Accounting by Alan Melville, Frank Wood's Business Accounting Volume 2, and the IFRS Foundation website. Your university library and lecturers will also provide tailored materials for the Kenyan context. The accounting principles in this unit, as you will soon discover, have a very real and tangible impact on Kenya's economy. These principles aren't just theoretical concepts. They are the building blocks that support financial stability and growth across various sectors. For SMEs, proper inventory and revenue accounting is not just good practice, are crucial for sustainable growth and long-term viability. It allows them to make informed decisions and strategically plan for the future, and credibility with investors, who are looking for well-managed and transparent businesses to support. NGOs rely heavily on sound accounting practices for transparency and, most importantly, donor trust. Without this trust, they cannot effectively fulfill their missions. It's about applying these standards diligently to manage funds responsibly and report accurately, ensuring that every shilling is accounted for and used effectively. Legal compliance, including strict adherence to the Companies Act and ICPAC requirements, is non-negotiable for maintaining ethical and professional standards. This makes mastering these topics absolutely essential for all Kenyan businesses, regardless of their size or sector. Accurate reporting of assets and any post-reporting events is vital for tax compliance, regulatory adherence, and sound investment purposes, ensuring informed decision-making. The skills you gain in this unit are universally applicable and highly sought after, opening doors to exciting opportunities in audit firms, local companies of all sizes, NGOs dedicated to various causes, or even in your own entrepreneurial business ventures. You'll be well equipped to contribute significantly to robust and transparent financial reporting, fostering sustainable economic development, and promoting good governance practices throughout Kenya. Therefore, your diligence and commitment in this unit will undoubtedly pay significant dividends in your future career and professional endeavors.